So can you explain that a bit more? Because as soon as internationally trained physicians hear saving tax money, I'm interested. So if you can just explain a bit more why it is the most efficient
Yeah.
way to save money.
So the Income Tax Act has a number of provisions that allows individuals to save for retirement. And at the very bottom of the hierarchy is the tax-free savings account, because it only has a $6,000 a year limit, or is it 6,500 now?
6,500, same thing.
6,500, yeah.
Yeah.
So it used to be 6,000, and then 6,500, and it's indexed every so often. So what are you going to do with $6,500? Even if you have a 10% rate of return, it's not going to do much. So it's fine. It's useful. It's great. I have one, but does it really, will it provide for your retirement? No.
No.
So then above that is the RRSP that 98% of physicians know about, because we have the banks advertising RRSP season, in January, February.
Yeah.
And they rush to the bank to make their RRSP contribution to get one tax deduction, annual contribution. So that's fine. And the limit's closer to 30 some $1,000. Above that is the individual pension plan, which we offer as well, which allows you to not only do your annual contribution, but you can do a whole bunch of other contributions, more tax deductions. So you can do a contribution for past service if your medical corporation paid you a salary in previous years. You can do special payments, extra top-up contributions if the rate of return on your assets is below 7.5%. You can do a terminal funding contribution if you decide to turn on the pension prior to age 65 and you want to get an index unreduced pension. Well, you can pre-fund, you can accelerate contributions and deductions through time. So the IPP is a tall order above the RRSP, but at the very top of the hierarchy is the personal pension plan, which is what our company devised and commercialized since 2012. And what the personal pension plan does is it does everything an IPP can do, and we just call that the defined benefit component. And to this IPP architecture, we bolted on two other accounts. We bolted on a defined contribution account and what we call an AVC, or additional voluntary contribution account. That allows you to transfer in registered monies from other sources. So now you have this combination triple account pension solution that we call the PPP, that allows you to put even more money aside than an IPP and all the other solutions. So when you graph the different solutions, you can see that assuming the exact same rate of return, because we're allowed to put more money in, you end up at the top of the curve. That's why we call it the best solution in Canada.
If you found this clip valuable and you'd like to listen to the whole episode, then please go to Spotify or Apple or Google or wherever you like to listen to your podcasts and search for Your Rich Fulfilling Life Show for the whole episode.